have put the inventory, one entry to the cost of sales, other entry to the current assets, and depreciation, one entry to calculate the accumulated depreciation, other one is for the building depreciation, and third one electricity, accrued electricity expenses, administrative expenses, as well as for the current liabilities. Then we can move to these our trial balance. Then simply we are required to enter the amounts, right? So build in we have taken, no, that's been in order to calculate the accumulated depreciation. Now you can see we have identified this building amount. Therefore build in we have already considered, provision we have considered, stock. Here it says that again in the first additional information also they are providing some stock. So that stock we are identifying under the closing stock because they are giving the balance as that means closing balance. But here they are saying that under the bracket the balance is they are giving as at 1st of January 2018. That means opening stock. Opening stock, that means I have explained, that means trial balance amount is going, there is only one entry, but for the additional information there are two entries. Trial, of course you are required to keep remember trial balance always there is a one entry. So the stock opening balance 30,000 we are required to have to calculate our cost of sales. So the amount is 30,000. So we have got some free workings to calculate cost of sales. Here you can see the word of opening stock. So 30,000 we can enter to here. That means only one entry. Opening stock we can found under the cost of sales. Cost of sales, right? So that is done. Then stock is done. Purchases, again cost of sales. Under the purchases cost of sales we are required to identify 220,000. 220,000 purchases. Here you can see purchases you are required to add 220,000. Only one entry. So you are required to keep remember the relevant area that you are required to enter these amounts, right? Okay, purchases we have identified. Then sales. Sales we can find out under the profit or loss statement. Sales amount is again 300,000. 300,000 sales coming under the profit or loss statement. 300,000 we can directly enter. 300,000. Then sales we have identified. Debtors. Debtors and creditors, of course it is coming under the current assets and current liabilities. Debtors mean we have provided some our goods on credit basis. That means we have sold our goods on credit basis, credit sales. So that means some customers are there, they are required to pay some amount to our company. That means we are considering as account receivable. Account receivable. Debtors. Debtors, of course, you are required to keep remember when you are seeing the debtor, or we can say the word account receivable. Receivable. So in that case you are required to identify account receivables are of course asset. That means we are having some sort of balance within our customers. So they are having a liability, we are having the asset. So that means one customer is there, they are required to pay 40,000 to our company. So that 40,000 will be an asset of the company. That asset we are identifying as the debtors. Debtors we are going to discuss under the statement of financial position under the current assets. So we have put the inventories. Now you are required to put the account receivable. Well, so we can say debtors. Debtors, right? So the amount is you can see that amount is 40,000. Amount is 40,000. Right? Again creditors. Debtors, creditors. Debtors mean asset, no? Debtors mean asset. That mean that means customers required to pay some amount to us. Right? So what about these creditors? Creditors mean that means we have purchased some item based on credit terms. That means of course we are doing the credit sale as well as we are purchasing based on credit terms. That means that transaction we are recognizing as credit purchases. So credit purchases are there. That means creditors are there. We are required to pay some amount to our suppliers. That means creditors. Creditors again a current liability. Again it's a liability, no? That means if we are getting a bank loan, so normally bank is giving 2 to 3 years to settle down their loan balance. But if we are purchasing some items from our suppliers, normally they are saying that within 1 year you are required to settle down. Therefore, creditors, or we can say there is another name what we are calling the payables, accounts payable, payable. So that means current liability. Current liability is 30,000. 30,000. That means yeah, current liability you are required to identify. Accounts payable, payable. It's about 40,000. 40,000. Here 1,000. Right? Okay. Then 40,000. Right? So debtors is 40,000. Payables is 30,000. It's about 30,000. 30,000. Right. Then discount allowed and discount received. Discount allowed means that means normally when someone, that means for an example debtor, so we have made some sort of credit sale, when they are settling down our balance, for an example there is a person what we are calling Sandun. When Sandun is settled down my balance, we are giving some sort of discount, right? We are giving some sort of discount. So you can see that in these days all the entities they are giving the discount. So when we are giving some sort of discount, that discount is an expense for the company. That is income for the customer, but it is an expense for the company. So therefore, discount allowed we can consider as that means when we are doing some sort of sales, we are required to consider these kind of expenses. We are required to give some sort of discount. Therefore, discount allowed we can consider as expenses under the distribution expenses. Distribution expenses, it is 2,500. So we have prepared this table. So 2,500 it is discount allowed. At the same time, there is a concept called discount received. That means when we are settling down our balance, that means we have purchased some sort of items on credit basis. When we are settling down, the supplier is giving discount to us. So in that case, if the suppliers are giving some sort of discount to us, of course, that kind of discounts can be an income from our side. So in that case, discount received we can consider as the other income. Therefore, we can consider about other income. Under the other income, you are required to enter this 2,000. 2,000 other income, because discount received, of course, it's an income for our business. That means again you can get some note. That means for the other income, then you can write discount received. It's about 2,000. So that amount you have directly entered to the other income column. Right? Okay. Then we have other income we have considered 2,000. Right. So then electricity expenses we have considered. Discount received of electricity expense. Bad debts. Bad debts we are identifying as, again, when we are doing our sales, some customers are there, they are not paying the relevant amount to us. So they are our customers, no? They are getting some sort of goods from our company, but they are not settling down the value. So normally within the accounting treatment, we are identifying if the customers are not settling down, so we are required to say, that means cut off that amount as an expense of our business. So that means if the customers are not settling down the relevant amount, then it is an expense for the other company. So that means that kinds of companies we can identify as the bad debt. Bad debts, again we can that means bad debts are coming under our expenses. That means normally bad debts are occurring due to these credit sales. Therefore, under the distribution expenses, bad debts are 1,500. Bad debts are 1,500. Bad debts are 1,500 distribution. 1,500. Bad debts are 1,500. Right. Then we can move to these the other information. Right. 12% bank loan. So if you are getting a bank loan, of course you are having a huge responsibility to settle down that bank loan. Right. So therefore bank loan, of course, we are identifying as a liability. But previously I have saying that if you are required to settle down your liabilities within 1 year, we are required to identify those liabilities as current liabilities. But here bank loan, normally the bank is giving more than 1 year to settle down their bank loan. Therefore that bank loan we can identify under the non-current liabilities. Then non-current liabilities you can write bank loan. It's about 100,000. It's about 100,000. Right. So then you can see that there is again hint. Bank loan is okay, we have over, but they are saying 12%. So what do you mean by the 12%? So the 12% means the bank is saying that okay, you have taken some sort of bank loan from our bank, but again you are required to pay 12% interest. 12% interest on annually. So here, if the bank loan is 100,000, your interest rate is, they are saying 12%. So then annually, what is the interest expense? So the interest expense should be, that means 100,000 multiplied by 12% now. That means which is equal to 12,000. Right? So that means within the current year you are required to pay 12,000 as your expenses. That means this interest is relevant for the current year. That means if you are getting a bank loan, of course you are required to pay the relevant interest amount within the current year. Therefore here bank loan interest amount is how much? So that means companies already they have paid 10,000. Right? So that means previous one also we have identified. So the relevant amount. The relevant amount is how much? The relevant amount we have calculated 100,000 is the loan amount, interest rate 12%, therefore the relevant amount is 12,000. Paid amount is how much? 10,000. No, we have identified by looking at our trial balance. Then 10,000 is the paid amount, relevant amount is 12,000. That means you are required to pay 12,000, but 10,000 has been paid. Then there is a remaining amount. How much? 2,000. That means remaining liabilities. So previously I have said that if there is any kind of remaining liabilities, of course, what is the adjustment? That remaining liabilities we are required to identify under our current liabilities. That means within the next year you are required to settle down this interest expense, right? Interest expense, that means within 1 year you are required to settle down. Therefore, the remaining amount we are required to consider under our accrual expenses. Like so we have done this kind of one. That means electricity expenses. So here you can see electricity expenses. Under that one, again current liabilities, you can write this accrued interest expense is about 2,000. It's about 2,000, right? So likewise, again under the profit or loss statement, you are required to identify the relevant amount, not the paid amount. Paid amount on here is how much? Paid amount is 10,000, but the relevant amount is how much? 12,000. That 12,000 is going to these. That means here we are having loan interest. Loan interest we can always, the interest amount we are going to classify it under our finance expenses. Therefore, the relevant amount 12,000 we are required to classify it under our finance expenses. Loan interest is 12,000 finance expenses. Finance expenses 12,000, loan interest, that means the paid amount, that means that is not allowed. That means of course you are required to consider about the relevant amount. They are saying that paid amount is 10,000, but actual amount is how much? The relevant amount, incurred amount is 12,000. 12,000 you are required to include under your finance expenses, and the remaining liability, that 2,000 you are required to enter under the liabilities. What kind of liability? It is under the current liability. because within 1 year we are required to settle down that one. Okay, now we can move to the next item. Okay, bank loan is okay, bank interest we have done. Cash balance. So normally cash we can consider as, that mean asset of the company. Asset of the company, that mean cash, of course, that mean liquidity is very high, that mean very quickly we can, that means same as the cash, that means we are not going to convert those cash balance into the cash, that means cash balance you are required to keep, remember, of course it is coming under the current assets. So 35,000 you are required to put under this current asset, 35,000. Then you can write here cash 35,000, 35,000. So very simple, that means again cash, if there is a cash balance, of course you are required to consider under the current asset. Again there is a telephone charges. So telephone charges also we can consider as the administrative expenses, 2,000. Then again under the administrative expenses you are required to write 2,000 telephone expenses, right? So likewise telephone expenses. Then the final one is capital also, that mean there is a section called equity under the statement of financial position, right? So capital amount we are required to enter to the statement of financial position. Here you can see under the equity there are two items. First item is capital, other item is plus or minus current year profit. Here profit. Capital amount is 124,000, therefore 124,000 we can enter. Right. So then now our sum is finished. So what we are required to do is, first we are required to prepare our statement of profit or loss. So in order to settle down our statement of profit or loss, first of all we are required to solve down our pre-working. So then we can focus on first pre-working. That means here we are having expenditure table, no? Here we are having expenditure table. First we are required to get the total amounts of that our expenditure table. So the administrative expenses, the amount is how much? 70,000, then 6,000, then 2,000. It's about 78,000, no? 78,000. 78,000. That should be coming under our administrative expenses here. 78,000. Right? So then distribution expenses 2,500, 1,500, it's 4,000, no? 4,000. Distribution expenses 4,000. Then finance expenses 12,000. So there is no any kind of other finance expenses, 12,000. Other expenses, no other expenses. Right? Okay, now we have calculated our expense table. Now we can move to calculate our cost of sales. So cost of sales value is how much? 30,000 opening stock is there, purchases 220,000. Therefore the total value is how much? 250,000. From 250,000 you are required to deduct closing stock. Closing stock is 22,000. 228,000. 228,000. That cost of sales value you are required to enter to the profit or loss statement under the cost of sales. 228,000 here. 228,000. Then you are required to deduct cost of sales value from your sales value. Sales value is how much? 300,000. Then cost of sales value we have identified 228,000. 72,000 is your gross profit. Then there is other income, that's mean discount received. Then 72,000 plus 2,000, 74,000, no? 74,000 is there. So that is the total income. Now we are having our expenses, right? 78,000 is there, 4,000 is there, 12,000 is there. That is all our expenses. 94,000. 94,000. That means here all the expenses 94,000. Then from the total income you are required to deduct total expenses. You are having income 74,000 total income. You are having total expenses 94,000. Then you can identify your profit or loss. So here profit or loss. That means the statement name also profit or loss. Loss is how much? 20,000. You are getting minus value. That means your current profit is how much? 20,000 loss. That profit or loss, current year profit or loss, you are required to enter to the statement of financial position. Here you can see capital. We are adding no minus in current year profit. That means here we are having current year loss, no. So in that case we can write profit or loss. Then it is 20,000 minus, no. Therefore we can get the final amount 124,000 minus 20,000, which is equal 104,000. Then we can get that amount to the second column 104,000, right? So then we can now settle down the balance sheet. Built-in value 140,000. Current assets, we are having three kinds of current assets. Closing inventory is there, account receivable, debtors, and cash. 97. Total one is 97,000. Therefore, total asset value is how much? 237,000. So that is the total asset balance. Total asset balance that should be equal with the equity balance. Equity and liabilities balance. So what is the equity balance? 104,000. Then liabilities balance. So here non-current liabilities we are having only the bank loan. Current liabilities we are having three kinds of current liabilities. Then electricity 1,000, payable 30,000, and accrued interest expense 2,000. It's about 33,000. 33,000. Then you can get the total one. Total equity value is how much? 104,000. Then non-current liabilities 100,000 bank loan. Then total current liabilities 33,000. Then you can get 237,000. That means our calculations are correct. That means we have balanced the balance sheet. So that's how you can prepare the financial statement. It's very easy, you know, very easy. That means again you are required to identify the relevant amounts and the relevant ways to prepare the financial statement. So it's very easy actually. That means if you are identifying, okay, so the building, this account, provisions, this account, stocks, this account, likewise. So it's very easy to calculate the relevant amount. First, you are required to consider about the requirements. Then you are required to identify the accounting period. Then for the additional information, there are double entries you are required to keep. Remember, for the balance sheet, there is only one entry. Likewise, if you are doing your duties correctly, then you can balance your balance sheet as well, right? So today we have discussed actually 2019 the O-level paper, right? So we'll meet with new question, new advanced question to discuss more about to prepare to the preparation of for the preparation of the financial statement of single owner business, right? So we'll meet within new video. Thank you for your participation, right? So thank you.